The needs of the wealthy are changing, with more than $68 trillion expected to move from baby boomers to their millennial children. We're primed to see the rise of a whole new generation of wealthy people with a whole new set of expectations.
What we're seeing is customers' expectations shifting, not in dribs and drabs, but kind of overnight.
Many of these players still provide updates to clients in the form of a 50-something page PDF. The new generation doesn't want to interact like that.
The established wealth management players might have the wealth of today, but what does tomorrow look like? Emergent challengers are fighting for legitimacy and trust, while financial institutions and big banks are battling to create truly digital offerings. But who will be the winner?
There are not many people that are doing this particularly well yet, and that's why it's an opportunity right now rather than it being a saturated market. Banks are pretty good at, or pretty bad, depending on your perspective on things, I guess, of classifying people. How much money do you earn? How much assets do you have? How much artwork have you got? When they do that, what they're really saying is, how much effort, how much time are we going to spend with you in order to support you? Because if you've got money, then we've got solutions, right?
Although there aren't universal definitions, this is how we break down the different levels of wealth. Henrys, who have under £250,000 in investable assets, all the way up to ultra-high net worth individuals who have over £30 million. But it's not just about cash. We're talking about everything from real estate and investments to artwork and crypto.
I think there's a misconception that if you have money, that you are good with money. That the reality of that is not true. The idea that if you have a lot of money and you can afford to pay somebody who is good at money to make that money make more money, that just makes sense, doesn't it? So having somebody sort of do the work that you would do if you were a financial advisor for yourselves, this is really how they can add value to people. It's saving them time, making them money.
We're talking about top percentiles here, and with that standing comes sky-high expectations for service. Traditionally, this service looked like something out of a film. Putting it simply, it looked rich.
Traditionally, very much kind of white glove relationship, human-centered service. That is the model that has been adopted by all of the players up until now. It's also the model that, wealthy individuals expect.
The feeling of quality, the thickness of the carpet, the thickness of the paper, the squiggliness of the calligraphy on the logo. All of these things lend themselves to the feeling of a wealth experience.
Not just with money, but with their wider sphere as well. If I'm a wealthy person, I expect my advisor to not just know about me and my financial needs, but to know about my family. When's my wife's birthday? What do my kids enjoy doing?
By building deeply rooted relationships with high net worth individuals, the wealth management industry has been able to capitalize on the rapid growth of personal wealth over the last 20 years, driven largely by real estate valuations, so that there are now over $115 trillion of global assets under management.
Thinking about the kind of traditional industry, I would argue it hasn't changed much, because they're creating this system and this network, which is quite effective at keeping people in. However, that being said, we are also starting to see shifts in that with the shifting demographic from baby boomers transferring their wealth to the next generation of millennials.
The Great Wealth Transfer is set to take place over the next 20 years, and according to Forbes, we'll see an estimated $68 trillion passed down by boomers to their millennial children. The transfer is expected to make millennials the richest generation in history. And this new generation has fundamentally different expectations when it comes to how they use and interact with financial products and services.
Millennials think differently. They're not just going to carry on banking with Coots because mum and dad were there. They want to ensure that their needs are met in the way that they want them to be met. Many of these players still provide updates to clients in the form of a 50-something page PDF once a quarter. That is how clients are receiving the update on what's happening with their money. The new generation doesn't want to interact like that. They want to be able to get digital updates or, quickly at the click of a button, see how things are going, interact perhaps more frequently and not just through quarterly reviews or yearly reviews. So As this new demographic continues to inherit more of the wealth, I think there will be a lot more pressure on these big traditional established players if they want to try and retain this kind of new segment that's coming through.
The traditional players can be pretty slow at adapting to a changing market, and while they've tried to pivot, a new breed of more agile companies has emerged, focused on meeting the digital expectations of these new demographics.
The banking battlefield space for wealth is actually really interesting, because actually the traditional players and the new players are doing quite a very different job. The market has moved from somebody there to comfort you and guide you, and that they are the hand on the steering wheel making these things happen, to a self-service, self-directed world of, well, what level of risk have you got? What tolerance for losses have you got? And actually then pick from these 3 to 5 funds and, go away and see what happens, basically. So the organizations that are starting from scratch have probably got an advantage when it comes to creating capability, but they're at a disadvantage when it comes to brand awareness and everything that goes with that. So something that sits in between those two things is probably the sweet spot.
So what might that sweet spot look like? We think it starts with digital riches. Riches is a guiding principle to ensure that digital products are focused on what matters to the customer and directly solving a problem.
I think the richest thing applies as a fit. Actually, the real-time nature of the way in which people expect to be kept up to speed with actually how all of the things are performing is there. So the context of where people are, the service that I expect as a ultra high net worth individual when I'm in Portugal is different to when I'm in London, right? And you should know those things because your app knows those things. And then not losing that human part of it. The human part of riches is always critical, and the human part of actually connecting with an individual and speaking in the way that they want to speak, or being acronym free and engaging with them and their family, that's a massively important part. So yeah, I think riches for me fits really perfectly to this, in the way that if you build a digitally rich product that serves this market, it will solve many more problems than just how's my stocks doing.
But digital riches isn't something that you can just turn on at the flick of a switch. Traditional players need to fundamentally change how they build and evolve their offerings, from culture down to tech, if they want to become truly digital.
Any transformation is difficult. You've kind of got to first probably admit that there's an issue. And I think lots of organizations have probably admitted that there's an issue, but are finding it really, really difficult to connect both with their customers, their potential customers, but also their employees, in terms of the cultural change of those distribution points, the advisors, the people who talk to their customers ultimately.
80% of inheritors choose to leave the advisor that their parents perhaps used and find a new one, is because they feel like the advisor doesn't understand them and their needs properly. The only way to fix that is to either make sure you have advisors who perhaps your clients can relate to better, and or you ensure that your advisors are upskilled in the relevant way to make sure that they can actually serve clients.
Changing the way advisors interact with clients and understand their needs is crucial now there's less face-to-face time within the wealth management process. And there's one key element that's going to be pivotal to any success.
Being able to mine data from all elements of the client's life to create a truly holistic picture of who they are as an individual, and therefore what their specific needs are, so that the people who are servicing those needs are able to do so in a much more efficient, timely, and personalized way. And so, that's referring to pulling out their spending data to get a better picture of how they use their money on a day-to-day basis, how they need to optimize their cash flow. Data is core to all of this, because the more you have, the more you can use it to interpret, the richer the insights and the recommendations that you can give.
It's easier said than done for traditional wealth management players to go against what's worked so well for them historically. But for them to keep that advantage and win on the banking battlefield, they have to find a way to embed new technology and ways of working within their culture to deliver truly digital solutions to old and new customers. But time is running out. The great wealth transfer isn't a far-off concept years down the line. It's here and happening now. So, with challengers and traditional players all vying for a piece of the wealth pie, Who comes away with the biggest slice?
It's a difficult place to pick the winners because ultimately you've got organizations with huge amounts of heritage and huge amounts of customer bases, and you've got players with great aspirations and ability to deliver. It's very similar to the retail market that we saw in 2014. And actually, if the outcome is very similar, then those organizations that started with that ability to make things happen and move things forwards have done pretty well in terms of where they can kind of get to.
The winners in this space are going to be companies who take a customer-first approach, truly understand the unmet and underserved needs of the clients that they're trying to target, and create something that serves those needs and continue to demonstrate value over time so that you generate loyalty and build up a larger customer base in the future.
You can get a better wealth experience today from a challenger bank than you can from a wealth bank.
You wouldn't discount the big players?
I would never rule out anybody with a load of money and a load of customers.